I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's good to have you. It's good to talk with you. And we're heading into September and October, and I think it's going to be pretty wild, although got to say, this year we're seeing historic low volatility in the financial markets, meaning that they're barely moving day by day. The VIX, which measures the premium people paying for volatility in the options market, traded below 12 for the longest amount of time in its history. It actually hit an intraday low in July. So you've seen record low volatility, and I think that's going to actually lead to a big increase in volatility coming ahead of us. It's going to really take people by surprise. It could even be linked to, as if we haven't seen enough, but some sort of political turmoil in Washington, D.C.
President Trump today rolled out his tax policy. He wants to see lower taxes for everyone, although he said he also wanted to get rid of loopholes that help billionaires like himself. He said, look at this. I'm even willing to make myself a little poorer, but he wants to see the average person in the U.S. Pull their socks up economically and do better. But, Mike, what was the one ingredient from this thing that seemed to have the crowd pretty excited? What one ingredient was missing from all this?
Well, there's no specifics as far as I can see. Back in, I think it was May, either April or May, he actually came out with what he called a tax plan. It was one sheet of paper with tax brackets on it, basically drawn up on a napkin, and he said that was a tax plan. And it actually got news for a couple of days and helped boost his television and poll ratings, but it wasn't a real plan. And apparently, I think what we're seeing today is something very similar to that, where he's, speaking, he's saying things. I think they're nice to hear, but there is no specific plan. And Bloomberg did a story saying this and saying that Trump has appointed Gary Cohn and Steve Mnuchin as Treasury Secretary to be in charge of taxes in the White House. But they have no plan, and Mnuchin himself has said that nothing may even happen on taxes until next year, and it's really come down to it being up to Congress what's going to happen here, and if they can do anything, then Trump will kind of rubber stamp it and take the credit. That's the best case scenario, but this is today's news cycle. And I fear that we're actually going to be headed for some real political controversies in Washington, D.C. Over Trump and the Republican Party. I think we got a whiff of this following those events in Charlottesville where several Republican senators denounced his response. And then he held this big rally in Phoenix, and he said that he wants his wall built, and if it's not built, he's even willing to have a government shutdown. And I think we're seeing political lines being drawn between Trump and the Republican Party that, today are being ignored because of this tax speech. But I think by the end of next month, by the end of September, this will start to hit the news again and be very worrisome and troublesome. Part of it's going to involve the debt ceiling that has to be listed or some sort of deal made about it at the end of September, or that's going to be an issue that carries over too and gets all mixed up in this. So I think we really are going to see some sort of political chaos or controversy, which could result in Trump bashing his own political party, much like he bashes the media. You know, he has really popularized this theme of fake news, and he may create some other phrase or something to try to position himself as, you know, the person, the people's candidate, a pure populist by bashing his own party or both parties. You know, I really think if we get to that, it's an act, and what's really happening is that he has no tax plan. He is not really doing much real work, but is basically putting on something of a television show. And it is going to go out, you know, talking about this wall to appeal to his remaining base of supporters or most fervent supporters, which is probably half the people who voted for him. But to those people, issues such as immigration and the wall really do excite them. And I think his poll numbers for the rest of the country have dropped, and he's going to, it looks, to cater to his remaining base. So I think that's kind of where we're headed to. And the funny thing is, going into this year, the Dow broke 20,000 on the hopes that, you know, he was going to really do stuff to stimulate the economy, cut taxes, increase infrastructure, and so forth. And none of these things have happened yet, and it seems less and less likely, and the stock market went up on this. So my fear is it can go down in disappointment as we, you know, approach the end of next month, and it becomes more obvious that it's just chaos and controversy that's coming from Trump. I mean, of course, that's been the case, but, you know, if nothing gets done at all by then, I think it's really going to be too late, and people should be more careful about, you know, being fully invested in the U.S. stock market, and just be very cautious. The stock market valuations are extremely high. The measurement, such as stock market cap to GDP, is at a high. It's Warren Buffett's favorite indicator. The indicator I like is the cyclically adjusted PE ratio, which is the 10-year annualized S&P 500 PE ratio for the S&P 500 adjusted for inflation. It's at such a high level, it's only been past this current level once, and that was in 1999. So it's even higher than it was in 2007 and 1929. So those are risks in the stock market. I mean, but right now the stock market's like floating around. The Dow did make a high a couple weeks ago around 22,000. It's just pulled back slightly, and we're just kind of drifting around. The 50-day moving average in the Dow is currently acting as a support level. That's around 21,600. And that 50-day moving average has been support for a long time, really since past the election. And I think if we break that in September, people should not be surprised if we don't go down further. It's just been a buy point, and if it fails to hold the market up for the next couple of weeks, that'll be an indication that the trend is changing. And in the end, you know, we could talk about valuations and news and so forth, but it's the trends that really matter, and it's a shift in trend that we really need to be on guard for. So if the Dow were to close below 21,600, I think that would confirm that we did make a significant top a couple of weeks ago, and that you can expect lower prices. And the next level we'd be testing is the 200-day moving average at 20,800, about 1,000 points lower from where we are now.
We'll have more with Mike Swanson right after the break.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Welcome back. We're chatting with Mike Swanson. Mike, if the Dow does drop below the certain points, the moving average points that you talked about, will it be a soft slide, or could we see a 10-20% correction happen overnight?
Well, I think it would be if we break the 50-day moving average, which is 21,600. I think the next target is basically 20,800, which isn't that far away. And it could reach that in just a couple of days if it were to break down. And it wouldn't be that big of a deal. The big question, though, would be, do we break that level after that? And we'll just, we would be talking before that were to occur, and we get to that point. But if we were to break that down at that point, then yeah, I do think we would see a really significant drop. But we'll talk about that, if we get there. And there will be warning signs that it's going to happen, so it shouldn't really scare anybody. But regardless, I don't think there's any reason anyone should be fully invested in the U.S. stock market after we've been going up for 8 years and the valuations have reached what they've reached. And normal prudent investing dictates don't be 100% in something anyway. I mean, typically you're told or taught to invest in the stock market and invest in bonds. That's what most Americans are told to do. But I would add that invest in gold, invest in silver, because interestingly enough, since that recent peak in the Dow, they're actually been trading opposite to the Dow and better than the U.S. stock market. In fact, year to date, the price of gold is actually up more than the S&P 500 is. And last year, gold stocks went up for the year of 2016 50%, beating the return of the S&P 500. So these are sectors that don't really trade in the stock market, tend to act even as safe havens when there is turmoil. You've seen that the Korean the missiles get launched and gold goes up, but the same thing I think will happen if there is the type of political controversy I'm talking about, which I think is very likely, especially if it revolves around shutting down the government or this debt limit getting passed down the buck a couple months or something, which had happened in 2013 and 2011. So I think people should have money in gold, in silver, and in mining stocks as a safe haven, and not only as a safe haven, but as a way to profit. Because I think they started a bull market last year, and they went up a lot in the last summer, corrected in the fourth quarter, and went sideways all year, this year, consolidating, and finally this week, GDX, which is the gold stock ETF, and I do have a position in it, it went above 24. The price of gold went above 1,300, which it has acted as resistance 3 times this year, rallied up to 1,300 and went below it. It finally went through it, and I think it looks like it somehow might float around the 1,300 level or for a couple of weeks or something. But I think it's a sign that the trend is shifting up, and so I think if people buy gold and silver, they don't have much to worry about, no matter what happens to the stock market.
Is one of the advantages of gold and silver the fact that you can buy small packages at a time? You don't have to have a huge investment like usually stocks. You have to buy 1,000 at a time.
Yeah, well, I mean, nowadays with anyone with a brokerage account, you don't have to go and spend $1,300 to get an ounce of silver. You can just buy $100 worth of a gold ETF, such as GLD. That's the most popular one, or you can buy ounces of physical silver if you want to, for less than $20 and just stack them up in your house. And there's something to be said for doing that too. It's kind of neat to actually own an investment that you can actually pick up in your own hands. But nowadays, the funny thing is that it's so easy to trade in and out with a brokerage account that in a way that actually will bring even more buying into gold and silver. One thing I think that's important to mention is over the past 15 years, so much of the trading that takes place in the financial markets is being done by hedge funds and computer robots, not by real people. In fact, the bulk of the trades are coming from trading robots. And the way they work is they've got algorithms that try to look for things that are acting better than the stock market and aren't correlated with the stock market. And first of all, they'll look for stocks like that. And this is one reason why over the past 2 years, these so-called FANG stocks, such as Facebook, Amazon, and Google, have outperformed the market because they mostly perform better than the stock market, and they're not trading correlated with it, meaning one by one. Like if the Dow's up 1%, they're not up 1%. And sometimes the market would be down and they would be up and so forth. Although that's not really the case anymore the past 6 weeks. But regardless, the point is that the trading robots are attracted to stocks that outperform, and gold and mining stocks and silver, it's starting to outperform the stock market, all of them. And if that continues, trading robots and hedge funds are going to flock into them, and I think that'll provide the real source of buying that will lift them up. The problem with the individual investor, a lot of people that are so-called gold bugs, they're already in, and they're not going to sell, and they might buy a little more. There are people, of course, cautious, and it'll take higher prices to get them to buy more and start to want to chase it. But in the end, the bulk of the buying is going to come from Wall Street institutions and hedge funds and so forth. And the interesting and neat thing about gold is it only takes a small amount of buying to go into the sector to make the mining stocks really go up. In fact, we saw that on the opposite negative sense back in February and March. If the the GDXJ ETF, which is a junior mining ETF, that ETF fell into some serious structural problems where it had to sell a lot of its holdings. And a lot of people were front-running that, selling the stocks ahead of time or even shorting them, and it's just a total disaster. And that situation actually caused the gold stocks to be weak, just that alone for a couple weeks. So imagine if there's big buying that comes in, what it can do. So I really think people don't think of it now as a necessary investment, but I think people at some point will come to see it that way. But it'll be the Wall Street hedge funds and institutions first. The problem with the people in the United States, the individual investors in the United States, they're just so focused and addicted to trading technology stocks, watching CNBC, that they really will be very slow to the game to getting into gold and mining stocks. People in Canada, of course, you know, a lot of them are already in it, and more of them will get into it. They're just so much more familiar with it. For Americans, it's such a foreign concept, and it'll take gold stocks going up for a few years to get the average American interested in them at all.
We'll have more with Mike Swanson right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Mike Swanson. Mike, what kind of an impact do you see Hurricane Harvey having on the markets?
Well, it's interesting. I don't really think with the broad market averages, it doesn't seem to have much of an impact at all. And I've seen a couple of people do studies showing that past natural disasters really, you can't see where that did impact the averages. But I think the most interesting thing, which people should pay attention to, is that it hasn't caused the price of oil to go up. And it hasn't caused oil stocks to go up. And I think that's a confirmation that the overall trend in oil and oil stocks is weak. And that's what I'm taking away from the market reaction to the hurricane. I mean, you would think wiping out or shutting down the refiners on the Gulf Coast of Texas would impact the oil market, but it hasn't. So, I think that's a confirmation. We got to be cautious on oil for the time being, but eventually that'll change. So, I pray for the people that lost their homes and the chaos that's going on down there. But in regards to the stock market, it doesn't seem to really be making much of an impact at all.
Lumber might be impacted, but I think the biggest impact there is the forest fires in British Columbia, where an area bigger than Prince Edward Island, one of our provinces, has been burned. And lumber prices have been skyrocketing. Plus, Houston will need a lot of lumber for rebuilding or repairing homes, I would think. Yeah,
I would. That makes a lot of sense. So that might be something to keep an eye out on, and maybe some construction stocks will get a little bit of a bid. They can do work down there. Hopefully it's not like the disaster in New Orleans, though, and it's not rip-off contracts and Halliburton and some of these really corrupt or sleazy deals going on. But we'll see. We'll see if Trump will actually stop something like that this time.
Also, I would think people should be wary of used car sales. Where did that car come from? Was it a victim of Hurricane Harvey and just recovered, maybe repainted, but it was underwater for 3 weeks?
Yeah, that's a good point. I didn't even think of that. Yeah.
Because I remember after Katrina, there were all of a sudden all these bargains on used car lots. Mm-hmm. And people were finding seaweed in the cars.
Yeah, making a new meaning to the word lemon, that's for sure.
Yeah, now it's kelp. Mike, always fun talking with you.
You too. It's good talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com radio. You can find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. You might find the quality of the broadcast better on YouTube. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.